And joining me now as we take a deeper dive into those market moves is Rob Towell from Sasfin. Well, thank you so much for your time, Rob. Interesting print that we saw out of the US today, coming out slightly higher than what markets had anticipated and also slightly higher than the print that we had seen in January. What did you make of this and also how the market has reacted?
Well, everybody's hoping that inflation starts to come down so that they can get interest rate cuts. But you're starting to see that it is a little bit sticky, but it is still, at decent levels, 3.8 instead of 3.7. It's not a huge move or a very big difference. The market seems to be taking it its stride at the moment. US markets are up at the moment and Nasdaq's still up. So I still think we're going to get those cuts that I expect in this year. It just depends when they start, but I think we definitely will see one in May, and then we'll see how many we get later in the year. So maybe not, at the end of last year, people were expecting maybe a March cut. Obviously, that's not going to happen. But yeah, inflation is still slowing down, and I think it's fine that you expect interest rates to come down later in the year.
All right. Well, let's take a look at some of the company news that came out of the JSE. Starting off with those interim results that we saw coming out of ATAC, seeing a waterfall of positive numbers over there from the top line all the way to distributable income per share. Even the outlook was revised up over there. Talk to me about the building blocks of this performance.
Well, they've been selling quite a lot of their portfolio to the PRC and the government pension fund. They're selling a lot of that waterfall development, and that's giving them a lot of money in to fix their balance sheets. So a good set of results. It's a very good precinct in general. And, I think that long term, the properties in South Africa in general are very well priced and, at low valuation levels. But we also need an interest rate cut. And I think that until we start getting the interest rate cut, the property companies are still going to be under pressure. So yes, a good result from them. Initially, we saw high prop on an operational level today, also having relatively good operational numbers, but they actually stopped their dividend. So you're seeing that while property is well priced and the property companies are improving quite considerably, there's still stress on the balance sheets and worry. So looking much better across the board in SA property, but we need those interest rate cuts.
Yeah, let's actually dive deeper into high prop because, of course, with ATAC, we saw those positive financial metrics, but it seemed that high prop was on the opposite side of the spectrum. I do note that you've said that operationally they're doing well, but in terms of those financial metrics, we are seeing a decrease there in the distributable income per share to the point where they've said that they're not declaring an interim dividend. How big are these challenges?
So I think they took a big hit from the Naira in Nigeria, which devalued dramatically over the year as they opened up the Nigerian market. So you saw other companies have issues with that as well. And that's obviously cut down their cash flows and put strain on the amount that they can pay out. So on an operational level in South Africa, their portfolio did relatively well, above what they were expecting. So you're starting to see the recovery in property that I was talking about earlier. But there's still a lot of headwinds, and Africa has been a difficult one. You've got difficulties for Vodacom in Egypt with valuation, a currency that's devaluating there. MTN got a devaluating currency as well in Nigeria. So you're starting to see any companies in Africa starting to have quite a lot of difficulties with cash flow, and that's putting pressure on high prop in this situation. So you want to look maybe for companies on the property side that have got European exposure rather.
Yeah, I mean, even with headwinds, though, it seems that the insurance industry is doing quite well. Old Mutual coming out with a trading statement saying that they expect adjusted headline earnings per share to climb as much as 33% for the full year. Improved performance there operationally and financially. And obviously, it seems that this is a trend that we're seeing across the board in the insurance sector. What have you made of Old Mutual's trading statement today?
Yeah, so insurers in general are getting a good uplift from the higher interest rates on the endowment side of their businesses, so they get income from that. And then the markets themselves have moved up internationally and locally. The markets have improved, especially internationally, and with a weaker rand, converting those into really good increases in AUM and management fees. So you're starting to see that come through on the insurance side. But then the general classic insurance businesses of life cover, they're holding their own in these markets at the moment. Initially, you saw a drop off after COVID, but slowly those are picking up, and you're starting to see Old Mutual's numbers. They are starting to sell again into that sector, and relatively good performance from Old Mutual. They've had 3 or 4 years of quite difficult earnings, and they're slowly coming out of the big behemoth. They got rid of Scandia and Quilter, etc. So they've had a lot of corporate action over the last 5 to 6 years, and slowly coming out of a leaner machine. So these are quite good results from them, and they're also going into the banking side in the next year or two. So they're looking relatively good. We've added them to our portfolios at Sasfin, so we like Old Mutual.
All right. Well, let's get to your stock pick for today, Rob. What will it be?
So going offshore, we're going to Novo Nordisk. They make the super diabetes drug Wegovy. Obviously, the valuations of that company are high because there's been such massive demand for that medicine. However, we think that still, they're only supplying a couple of million people in the United States, and according to the insurers, anybody that has got a body index above 30 can get insurance on it, and that equates to 120 million people. So even though it's got a slight high valuation at the moment, we're taking a 2% holding, so not a huge holding, but we think it's undervalued on how much sales you're going to get through for these drugs and the amount of new drugs that you're going to get away from them. So we're still buying Novo Nordisk, and we think that it's got at least 18 to 2 months of really stellar growth coming forward.
All right. Well, thank you so much for your time and for your analysis on what has moved the markets today, Rob. That was Rob Towell from Sasfin Wealth.